All right, good morning, everyone. Today we're going to go over HIMS and HERS, HIMS stock. Currently at a $1.8 billion valuation, selling at around $8.88. Okay, let's get right into it. Let's not waste any time. So I've highlighted some of the things that we're going to go over today. Total revenue, earnings per share, profit margins, cash flow per share, and the cash flow from operations. We'll go over some other stuff, but these are the main points I want to go over. This is straight out of Seeking Alpha. I just went ahead and changed it to quarterly and pretty much exported all this data out and just put it on this spreadsheet that I made myself. Right here, basically, it's just going to show you your year-over-year growth from 2022 to 2023. We'll start up here at the top, take a look at total revenue and also earnings per share year over year. This is going to start from March of 2021 all the way to September of 2023, which was the last reported date that they did. So for the last 8 quarters of revenue, they've done nothing but grow year over year. 88%, 83%, and 56% respectively year over year growth compared to 2022. So they're definitely making more revenue. Went ahead and made little notes right here. So earnings growth must be supported by sales increases. As you can see, we have sales increases for the past 8 quarters. And for the past pretty much year of earnings per share, they've been growing it year over year. Current quarterly earnings per share should be up a major percentage, at least 25 to 50% or more over the same quarter the previous year. The best companies might show earnings of up to 100% or more. So the last 3 reported quarters, you're going to have 37% year-over-year growth, 70%, 55% respectively. All right, moving on to profit margins. So from June of 2022, 76% profit margins, and of September of 2023, which was the last reported data profit margins, they are up to 82%. So they are increasing their profit margins year over year. Now, this is where the big improvements come in. They were making negative cash flows in 2021 and 2022, but they have huge improvements in 2023. If we take a look at cash flow per share and cash flow from operations, we could see that there is huge year-over-year growth. So we'll go and start with cash flow from operations. The latest quarter, they reported $25 million from their operations compared to $6 million in 2022. That is a 320% increase in the improvement of their cash flow. And the previous quarter before that, that is also a 362% increase. When you compare that with cash flow per share, the latest reported cash flow per share was 0.09 cents compared to 2 cents a year ago. That is a 350% increase in cash flow per share. So huge improvements from their cash flow statements. All right, so that was a brief overview of some of the quarterly data I just wanted to go over real quick. Now we'll take a look at some of the yearly data and see what we could find. So now we're taking a look at some of the yearly data. Total revenue. So if you take a look at this data right here, they aren't growing as fast yearly as they were in 2019, 2020. They were growing at 209% year over year. From 2022 to 2023, they just grew at 50%, but they are still growing. And then when you take a look at earnings per share, you could see that there is a trend towards positive earnings per share. So they are on their way to positive earnings per share. It looks like they will be able to survive and become profitable soon. Take a look at their cash, guys. They have $212 million in cash with 0 long-term debt. So again, if we take a look at some of the data down here, again, they have huge improvements in their cash flow from operations. So they're definitely not going to go bankrupt anytime soon. A company can't go bankrupt with 0 long-term debt. They have a lot of cash to sustain themselves for this year. So enough with the quantitative stuff right now in the Excel spreadsheets. We're going to go over some of the stuff they talk about in the latest quarter 3 earnings of 2023. So mental health offerings surpassed 125,000 subscribers in the 3rd quarter. They are maintaining triple-digit growth. Their brand is expanding offerings of personalized solutions, continue to resonate with more and more consumers and enabling us to surpass 1.4 million subscribers. This is important to note right here. Per subscribers nearly doubled year over year in the 3rd quarter. They are rapidly growing. They do have a new product out already. So this was produced last year, so it's already January. They have released this new product already, which is a weight management offering. New section right here, losing weight. It's for weight management products. It just released this January, so this will definitely help their earnings. They also have a new technology platform coming out called MedMatch. It is a proprietary service that deploys artificial intelligence and machine learning against the expansive data set at the core of the HIMS and HERS platform. This is going to be used to identify the most optimal treatment for a particular person. So yeah, this company is capturing market share at a rapid pace across a bunch of categories. They want to be the telehealth company. They have a great app. Pretty much all this has allowed them to deliver high growth, healthy cash flows. And again, they are on their way to positive earnings per share. They should help boost the stock price. Lastly, guys, a little bonus for everyone. They are implementing a program that allows them to purchase up to 50 million of stock in the next 2 years. So it kind of shows that the company itself believes their stock is underpriced, undervalued. They are buying back their shares. Anyways, $8.88 at a $1.8 billion valuation. They are only making about $700 million in revenue per year. It does seem a little overvalued, I guess, if you're trying to value tech stocks, but this company does have a lot going for it. Anyways, thanks for listening, guys. Let me know what you guys think about all this, and see you on the next one.